we have been getting current views on market valuations. Consensus seems to be that we're bordering on cheap to fair at the NSE. What is the kind of performances then we've been seeing on a day-to-day basis, the slight up and down movements say about the psychology of the investor right now? Because on the surface, it seems that we've got traders more focused on short-term trading and profit-taking as opposed to long-term where they see the potential upside.
Thank you, Alishia. Good morning. Quite correctly, you have spotted what most analysts have shared as in terms of the outlook on the market with respect to valuation. Consensus, like you rightly noted, is that the market is trading from pretty fair valuations, and in some cases even bordering on the cheap. Unfortunately, we haven't seen a translation of that into investor sentiment, as it were. I think largely some of the sentiments that have driven the activities on the floor of the exchange border on a lot of profit-taking activities following any significant bullish run on the market. We think that there are a couple of factors that are attributable to this trend. One of which, primarily, if you think about it, is the fact that a good number of the retail domestic investors who got severely burnt in the market fall of 2008 and 2009 are still trying to recover from some of the losses incurred during that period. A lot of the activities by this class of investors was driven by margin facilities from banks, and despite the fact that the underlying securities for which these facilities were obtained have been in a way for lack of a better word, obtained by the banks. We find that there are still, in some cases, interest expenses that are still running with respect to the facilities, and as such, you find that in some cases, whenever there is a sustained run of bullish trend in the market for a couple of days or weeks, as it were, people would generally take profits in order to pay down on some of the interest costs related to these facilities.
The rescued banks have been recording impressive rallies. I mean, Oceanic, as a case in point, has seen massive appreciation over the past month or so. I mean, what are you making of all the optimism surrounding possible turnaround and what we could see coming to the fore at these banks?
Oceanic Bank's bullish run obviously was triggered largely by the news regarding the plea bargain by the former CEO of the bank with respect to the asset forfeiture, $1.2 billion. Obviously, I think the underlying story there was the fact that looking at the bank's negative equity position, which is about $1 billion, $1.2 billion quite clearly takes the bank to within positive territory. And from an equity valuation perspective, I think what that did particularly was restore confidence, at least if for nothing else, in the fact in the ability of the bank to either go it alone, as it were, in which case it could more easily recapitalize itself, using funding from it.
So basically what we're looking at here is a revaluation of, if we're using Oceanic as an example, of these banks, right?
Primarily, that is what exactly you've seen. It is a revaluation of sorts, and I think using Oceanic as a proxy for some of the other rescued institutions, there are indications that, or there are expectations that something similar may happen for some of the other key ones, notably Union Bank, Bank PHB, Intercontinental, and in some cases Finbank, I think. And then also the positive news coming out with respect to announcements as to some kind of deals or negotiations that are ongoing. Largely have painted a largely positive picture for these institutions. Well,
some of the other results we've been seeing flow through have been overshadowed by these banking reports we've been seeing coming in left, right and centre. Lafarge Wapco was impressive numbers there, Q3 numbers coming in pretty high. Shaka Cement yesterday showing 9-month profit up 54%. What's your view on some of these players? We really put them under the spotlight in the first segment of this show.
Yeah, well, Ashaka, Lafarge, obviously the two players within the cement space. From a capacity, perspective, they are, dwarfed by the Dangote Group. However, with respect to margins and performance, you find that I think Lafarge was a lot better than you would say for Ashaka Cement. Ashaka's numbers look good on the surface because last year was a pretty bad year for the institution. However, if you look at the margins and the returns, you find that it is not particularly positive news. And given the capacity of that company, you would largely question what the future holds with respect to its capacity to grow earnings.
Well, certainly there seems to be consensus on that stock, whether you're an investor sitting in Nigeria or right here in South Africa.